Atrium's a specialist global asset manager, and a core part of what we do for our clients is run diversified portfolios, and in running those portfolios, our sole objective is to get our clients from point A to point B. It's a client-first approach, which means firstly defining what the mandate needs to be for the client, and then running the portfolio to specifically meet the goals and objectives as they've been defined for that client. We're very conscious of risk in managing our clients' capital. A core emphasis is on preserving client capital, in particular through market down cycles. Our orientation is very focused on achieving consistent, predictable return outcomes in order to maximise the long-term wealth creation for our clients. In doing this, we believe our approach is quite unique. Why? We believe there are three elements which distinguish us. Firstly, we have an absolute passion for finding high quality and attractively priced assets across the global marketplace. Secondly, we aim to preserve our client capital. This creates the awesome opportunity of compounding long-term returns. In doing this, we seek to minimise absolute capital loss at any point in time. And finally, we seek to ensure in building the portfolio, we don't excessively expose the portfolio to any single factor risk, be that equity market risk, interest rate risk, currency risk, or other factors that may drive the portfolio. If we illustrate Atrium's focus, it's seeking to build a portfolio for our clients that maximises the likelihood of reaching their financial goals and objectives, taking them from point A to point B. But on the way, seeking to maximise the consistency through a genuine focus on diversification. Now, the whole industry speaks about diversification. However, most diversified funds are heavily dominated by a single investment type, being equities. This was illustrated during the global financial crisis, where the average multi-sector growth fund fell in line with equity markets. However, at Atrium, it's also critical to identify and allocate to attractive investments. In any market, even during the global financial crisis, there are still very good opportunities in the market for investors to make positive returns. For example, in the same period equity markets fell during the global financial crisis, in 2008, Australian bonds were up by 15%, and foreign currency, denoted by the US dollar, rose almost 20% against the Australian dollar. Again, in 2011, when equity markets fell, property assets rose by over 13%. As the charts demonstrate, with a proper understanding of diversification and a real focus and flexibility to allocate to attractive investments, these are the necessary elements to achieve our client objectives and to get them from their point A to point B.